Welcome to day 169. Yesterday, we tracked a massive, explosive breakout. Today, the market is red. This shift creates the perfect environment to observe how a protocol handles pressure. This chart shows exactly what that pressure looks like right now. PLAZM pulled back 3.24%, down to 3.02 cents. eSHARE barely registered the move, dropping just 0.4% to $10.47. After a sharp upward spike, a shallow downward slope like this is a textbook healthy retest pattern. Stepping back to look at the macro picture, the total supply sits at 9.16 million tokens. At the current price, that gives the protocol an overall market value of $276,360. This pie chart shows exactly where that 9 million token supply currently resides. 41% is liquid, 24% is staked, and 16% sits in LP, or liquidity pools, which provide the trading pairs on decentralized exchanges. While retail traders focus on a 3% surface-level price dip, the true health of a decentralized finance project is measured by what happens underneath. We need to see if the underlying mechanics continue to function during these routine market breathers. Let's move away from the price charts and look down into the structural backing. The core reserves operate independently of daily trading noise. This visualization represents the vault, currently holding 224.67 ETH, $521,547. Even with the price dip, that balance is holding steady. Actively growing, users purchased 48 new bonds today at $43.66, pushing our total to $11,958. A declining token price did not stop new capital from entering the ecosystem today. The structural foundation is expanding exactly as designed, even on a red day. This massive accumulation of bonds powers an active, yield-generating engine running around the clock, producing a daily yield of $710.44, maintaining a bond annual percentage rate of 49.67%. The yield engine ignores a 3% token price step. This ticker shows claimed profits crossing a major milestone, $111,633, adding over $1,000 today alone. Alongside that, a payout of 94,412 PLAZM was distributed across 14.07 billion shares. The yield splits into 3 channels. Buy and Grow compounds 3.26 bonds daily from $2,880 reserves. Buy and Build deployed $27,490. Buy and Burn spent $67,070, destroying 20,000 tokens today, removing 19% forever. The token price dropped 3% on the open market, but the automated engine still generated over $1,000 in yield and ruthlessly destroyed 20,000 tokens. We know the current mechanics are running smoothly, but to confirm this momentum will last, we have to look ahead and see if there are any looming supply shocks or unlock events on the horizon. This radar shows 0 PLAZM releasing today. Over the next 7 days, the release is a negligible 2,913 tokens, worth roughly $88. Zooming out to the 80-day outlook, we see clear skies, 0 major cliffs, and no unlock events to disrupt the ecosystem. The pullback we saw after yesterday's breakout was completely normal market behavior. The exterior price might be red, but the interior metrics are fiercely green. While the price fluctuated, every internal metric held steady or improved. The burns accelerated, the yield held flat, and bonds grew. This scorecard shows what a healthy protocol looks like, using red days to quietly and efficiently build permanent value. The morning after Breakout Monday looks brilliantly bullish. This video is for educational and entertainment purposes only. Nothing presented here constitutes financial advice. PLAZM is an experimental DeFi protocol. You can lose your entire investment. Always do your own research and never invest more than you can afford to lose.